Welcome to today's market report.
Wall Street indices were firmly in the red after a choppy start to Thursday's session, while bond yields rose as investors digested economic data that provided the Federal Reserve little reason to ease its aggressive interest rate hike cycle. Oil futures tumbled more than 3% on demand concerns, and after a tentative agreement that would avert a U.S. rail strike, as well as continued US dollar strength with expectations for a large US rate increase. Economic data showed US retail sales unexpectedly rebounded in August as Americans ramped up purchases of motor vehicles and dined out more while taking advantage of lower gasoline prices. But data for July was revised downward to show retail sales declining instead of flat as previously reported. Separately, the Labour Department said initial jobless claims for state unemployment benefits fell for the week ended 10th of September to the lowest level since the end of May. Investors are widely expecting an aggressive rate hike after the FOMC meeting next week, but nervously awaiting hints from Fed Chair Jerome Powell about future policy moves. The Dow Jones fell 0.56%, the S&P lost 1.13%, the Nasdaq dropped 1.43%. MSCI scheduled stocks across the globe shed 0.96%, while emerging market stock lost 0.57%. Stocks, bonds and currencies on Thursday were showing a market increasingly understanding the Fed is going to hike more aggressively next week, referring particularly to the still strong labour market. Economists think economic numbers released today are tying a bow on the situation. In this vicious cycle where the data continues to remain resilient, that would imply a Fed that would likely stay the course and continue to tighten policy. Also clouding investors' moods on Thursday was the World Bank's assessment that the world may be edging toward a global recession. Sterling was at 114, Eurodollar was at 0.9995.
This is today's market news. Thanks for listening. We'll see you next time.